market update? Yeah, okay. This is probably my favorite part. I geek out on this sort of stuff. So let's go through what's happening in the market right now. So this week is a little bit of a hybrid presentation in terms of the market update, which means that some of the major MLSs are reporting their numbers and some are not reporting their numbers. And I've got some early preview numbers for us here in Austin, but I have the final numbers for both Dallas as well as for Houston. We'll go through the overview of all of Texas. Now, the all of Texas overview is just the May numbers, and then we'll start to hybrid it out into the markets that are reporting right now. So in May, Texas, the average sales price about 430,000, down 3% year over year. Sales down 7% year over year. So we are seeing a downward trend in sales prices. We are seeing a downward trend in the number of sales as well. And never is that more true in all of the Texas markets than in Austin, Texas. So Austin had the biggest run up in 2020, 2021, 2022. Austin's having probably, versus all of the other major markets in Texas, the biggest run down of all the major markets. Now, so what that means for you guys, before I go through the numbers, just want to be super clear on what this means for you guys. It is incumbent upon, it is required of you to make sure that you get your comps correct as a real estate investor. Like it is probably your comps and your repairs, your number one, your number two things. And then number three, you better know how to do math and do the real estate investor maximum allowable offer formula, okay? But where I see a lot of investors get hung up, especially as the market is changing, especially as the market is going down, is they're using the wrong comps. So if the comps that you are using to build up your ARV and to build up your offer are comps from the fever pitch, which was May and June of 2022, your comps are wrong. And your comps are off by probably 5, 10, or 15%, okay? Which is roughly all of your profit on a deal, okay? So as much fun as it is to get into a house and rip it apart and build it back up, it's a lot funner to catch the check at the end of the day. I can promise you guys this, okay? So please make sure you have the right comps. The people who are gonna feed you the wrong comps are who? Who's gonna feed you the wrong comps? Sellers, real estate agents, I'll tell you, it's the wholesalers, okay? The wholesalers are going to cherry pick those comps, and if you're not doing your own marketing and you're relying on a wholesaler to bring you those comps, they're going to cherry pick the best comps. It's just like, it's human nature, right? Some of you guys are familiar with Charlie Munger. Who's that? Warren Buffett's right-hand man. Okay, Warren Buffett's right-hand man. I'm not sure which one is the right or the left-hand man, but he says that everything in life comes down to incentives, right? So if your wholesaler is only getting paid if you are listening to the crappy data that they give you, right, and they are incented to give you, maybe in this case, the wrong data, so that you overpay for a property, you're going to find yourself in trouble. So if a comp that you are looking at in the agent description, as an example, says anything like multiple offers, best and final due by 5 p.m. on Wednesday, what do you know about that comp? It is no longer valid, right? Because are we in a multiple offer situation environment anymore? The answer is no, not really, right? So watch your comps. When the market is going down, you want to tighten the months that you will pull in your comps to 1, 2, or 3 months. When the market's going up, you can take comps from a year ago and it will still make sense, right? Because those are lower. But when the market's going down, you'll increase your risk the further out you guys take those comps. Does that make sense to you? Okay, so this is why, especially in the Austin market, where we're seeing prices down, in some cases up to 9%, where having that data really counts. Sales last month down 12%. Pending sales. Here's what's interesting about the Austin market. We may be at a transition point and we may not even recognize it yet. And these are early numbers, but the early numbers show that the pending sales in Austin are actually up 20% year over year. that is a huge jump. It's the first time we've seen pending sales up in probably a year over year and probably a year. Okay, so that's a big deal. Now I'm still waiting for all the numbers to filter through. It is possible that some of those pending sales may be realtors who have not changed their listings from pending to closed, right? So again, we're taking some early numbers here. So give me some liberty if they change the next week when you guys hear me do this presentation, but something to be aware of, especially here in the Austin environment. In the Austin market. In Dallas-Fort Worth, these are official numbers, so they are officially reporting. The sales price last month in Dallas, $520,000, down only 3% year over year. Down 3% as interest rates have more than doubled is something to celebrate. Not everybody has that kind of long-term perspective, but this is something to celebrate for sure. Hold on my calls, please. Closed sales, they're down, but they're only down 4% in Dallas. Pending sales, our closest leading indicator to what closed sales will be next month, down 7%. Where's everyone going? Everyone is leasing. So all of those would-be sellers who have said, I don't like the market right now, I want to sell when the market's going up, they're leasing, okay? And all of those would-be buyers who are saying, I don't like these interest rates right now and I want to wait till the market goes down, what are they doing? They're leasing from those sellers who don't want to sell, okay? So leases in Dallas up 26% year over year. Lease price only up 2%. We saw some much higher jumps earlier in the year, but now it's kind of starting to flatten out because we're getting to that point where we started to see those interest rates start to move up the same time last year. The Houston market just reported today. The Houston market had some of the best average sales numbers in terms of price, down, but only down 0.5%. Closed sales, however, down 13% year over year. I want to say it's the 15th, I can't remember if they said it was the 15th or 18th month in a row where we've seen a year over year decrease in sales, which is unusual. Now, if you compare it to 2019, sales are up about 4% year over year in the Houston market. And 2019 is what we would probably call our last normal year, so something to kind of be aware of if you want to compare more apples to apples. Lease listings in Houston up 17%, lease price flat, but the number of new lease listings, so people are saying, I'm not selling at the price that I want, as an example, I'm going to put it for lease. There are an additional 15% more properties for lease in the in the Houston MLS. San Antonio, unfortunately, still reporting the May numbers, but I'll go ahead and read those out to you. Average price, San Antonio did the best of all of the four major markets. Average price was flat year over year. Flat's the new up. Sales were down, but they were only down 3%. And it does make sense then that leases are also flat year over year. Lease price up 3%. So was this helpful, guys, in giving you some guidance on how to look at the numbers, how to look at the market, where we are today, and some of the different ways you need to think about real estate and real estate investing for the next 6 months probably? Yeah? Yes? Okay, great. I've really made a difference in about 2 people's lives in here tonight. So